Hey everybody, it's Pete. Welcome to today's episode of Stocks for Breakfast. It is Thursday, April 9th, 2020. A couple of quick things. Number one is the market is closed tomorrow in celebration of obviously religious holidays. I just want to leave it at that. I don't talk about religion at all or politics here in case you haven't figured that out. We do have a couple of things going on. Ed posted a question about a stock and when to buy it. We're going to cover that in just a minute. Actually, I think I have a really good video for you today because we're going to get into the visuals of scanning for good ideas while the market's open so that you're always in front of the best opportunities. Jobless claims coming out today. Be aware of that. I'm going to make a prediction on the market today. We're actually going to look at something I haven't looked at in a while, which is an indicator. I don't usually use them, but the one I'm going to call out today is pretty reliable. Starbucks actually made an announcement yesterday, I believe it was, that they're expecting Q2 earnings revenue to be down 50% overseas. That's a huge number. So that will be a stock I'll be watching today just to see if it has some juice as an active trade that we can get involved with over the next few days. Next, Disney Plus in only 5 months 50 million subscribers already. That is a really big number. If you've been following Netflix at all over the last few years, especially when it's had those meteoric moves after earnings, it was all about subscriber growth. So if you want to use the way that analysts look at and investors look at Netflix and what makes Netflix go up or down, it's 100% about subscriber growth. So if you want to use that same metric to trade Disney, that will be something interesting too. So we're going to go to the charts. Again, I always want to start out with the same thing. April's supposed to be really bad for what's going on in the world right now. Please be safe. I hope your family is safe. Please be smart. Go to the supermarket once if you have to. Get as much as you can. Get home. I actually went to Costco last week, and the lines were around the block as they were social distancing everybody. It was what it should be, quite honestly. So just be safe. I think that's the biggest thing everybody really needs to focus on right now. Because really, in the long run, staying home for a little bit versus being alive, it's no question, right? So we're going to go to the charts. I think we got a really good episode for you today. I think you're going to find fascinating what we're going to talk about today. I think you're going to have a lot of revelations where you're going to say, is it really that structured? And the answer is yes. That's how you repeat the success. And also, if you have any questions, absolutely, today I think you will, absolutely leave a comment. If you have any stocks you'd like to see reviewed like Ed did today, absolutely do that. And if you can, please click subscribe so you get updates for future videos because we have a lot of good stuff coming out soon too. So let's go right over to the charts. We're going to just take a quick look at first Disney. We just mentioned the news on Disney, the subscriber numbers. You can see where it is overnight, and you can actually see the news here. So that's a big deal. Subscriber growth in Disney is a monster deal. It looks like it's set to open up here. Still, obviously, in a longer-term downtrend. If we go out to the weekly chart, you can get a feel for where the stock was. And this is all really, really bullish prior to the market collapsing. Next, we have Starbucks. Which, by the way, that's a big thing too. And where were stocks trading before this? Those are kind of the filter you have to have in your mind. Starbucks obviously just came out with the news. It's down to almost 3% pre-market. So again, that's going to take a hit too. Ed actually wrote in and asked about Kohl's, about where would we be taking a look at Kohl's. So like a lot of the stocks we've been looking at, the weekly chart to see if they were well bid, well offered, that kind of thing. Kohl's is actually now well bid, and this week is positive. So just based on a weekly basis, again, dropping down to that micro time frame that we've been looking at. And then when I say micro, I'm talking about a daily candlestick. That, again, opening price here in Kohl's for the week. And as of right now, the week is positive. So whether you're swing trading the stock or if you're looking to day trade the stock, that would have been a week where you could have traded it to the long side and only looked to be a buyer. I just want to jump over to the market after this before we get into what I really want to talk about today. Ed, right now for Kohl's, although this week has been bullish, like we said on the weekly charts, you can see, I just want to reiterate that. This week, the weekly charts are well bid, higher highs, higher lows, and positive from the open. So we're looking to be a buyer in this stock this week and until that changes, right? But as far as a little bit longer term investment, which, by the way, I get a lot of questions about that. Can I do I need to day trade what you're talking about? Absolutely not. That's what the whole point of why we're going after the daily and weekly charts here, and that's a big reason people sign up and get into the coaching program. Even if you have a full-time job, you still have access to ask me questions all day, every day in our private community. So, Ed, I'm glad you brought this up because it applies to a lot of the feedback and emails that I'm getting. This as an investment, or this as a what I call a position trade, which is basically between one earnings report and the next. I wouldn't do anything in this stock until it cleared this level. Even though the weekly chart is now well bid, I wouldn't do anything until it gets above $20 and stays there. Preferably, what I call a fuel candlestick, F-U-E-L. Is a large body candlestick with a lot of volume breaking out of a trading range. So we also need to pay attention to the volume. And you can see we actually did get a really nice volume candlestick here, but we need to get out of this trading range. We want to see this, at least one or two of those outside of the trading range. So this gap up here, really big volume, but we need to see it actually create new levels. Remember, that's what we're looking for. New levels are where we get excited. We have inside days, inside weeks, inside months. Those consolidations, price is not making new highs and new lows, so there's really no price it's supposed to be. That is the price it's supposed to be, right? So, Ed, hope I answered your question there, and I hope I answered some of the feedback that we get, both in the comments as well as the emails, which, by the way, keep the emails coming. This is not only about day trading. And again, I had a long conversation with John yesterday about having a bias going into the day, and we're going to discuss that in 1 second. And whether or not you should only trade that bias. You should absolutely recognize, do you want to be a buyer or do you want to be a seller, and is it obvious? That's the number one question that I walk everybody through who gets involved in a little bit deeper than these YouTube videos. Is it obvious? If it's not obvious, and the smart money's not doing anything, why would you? And that's really one of the biggest things that I didn't realize for years. And finally, when I was sitting at my desk, I was like, well, there's no volume in the stock intraday. And then you look at the stock in a little bit bigger picture, and it's in a trading range, and you're like, well, nobody else is trading it. Why in the world would I be doing it? So again, write that down, put it on a Post-it pad, put it on a notepad, write it down. Is it obvious? And if the answer comes back yes, then you can take it a little deeper into the other stuff. But if the answer comes back no, why are you throwing your money away? You're the only person trading it. Now, again, only person's relative, but you want to be involved when it's obvious and there's volume and liquidity. Now we're actually going to get into what that means, because I think you're going to be really excited about the scan that I'm going to show you right now. So first, I want to go over to the market before we dig a little bit deeper. So obviously on the weekly chart of the SPY, we're now well bid, and well bid pretty good, right? So here's coming into today. And again, this is a long conversation I've been having with some people. I'm actually just going to remove this for now, because this technically was the breakout. Anytime you actually have a trend, this right here was the breakout level. So we are technically broken this downtrend. That is what, when you draw trend lines, you don't go through any price action. From the long side, you go the highest part down to where price action broke. So you're going to cross here, draw it here, and this is technically the change of trend. So if we really want to get fancy, how do you know if a change of trend continues or not? So that's really what it boils down to. This window here now broke to the upside, and we're technically in a change of trend to the upside. There's really no other way to put it. In this short-term trend, we broke into the upside. But, I know, right? There's always going to be a but, right? But that's our job. Our job is to say all of the arguments I could possibly put into this trade so I can make the best decision and have conviction. And I'll be honest with you, it's been a little challenging to have conviction when you're having gaps in both directions, closing on the highs, closing on the lows. So first, I want to break it down from yesterday's trade to how that affects what we're looking at today, and then how that affects going forward. So I'm going to zoom this out a little bit. So going into yesterday, we were very clear the test of the previous day's low would be a big deal, because the test of that previous day's low was this high from 2 days ago and yesterday's low. So this line actually that we had was over here, and we said that we're going to look to see right there. You can see it. So basically the previous day's high, the previous day's low were all around the same number. So we said coming into yesterday, this line was going to be a big deal. Do we break through the previous high, this low, and then start a move to the downside. Well, what we ended up getting was right around that level, we ended up getting what we call a swing low, which is a low with higher lows on both sides. So immediately we're like, okay, a breakdown failed. So now we're switching to the other side. Now we're saying, okay, the best trade for today would be a long. So if we go there, that is the opening price from yesterday, give or take a couple of pennies. So the better trade now is we know we want to be long because we broke out on the longer time frame. So again, building the argument together, we rally back, we fail to break support, get a swing low, which is a short-term momentum indicator to the upside. We end up getting above the opening price. Now you have a choice. Do I trade the first close above the opening price? Well, what do we have to consider? Well, we're still inside the opening range, which is the opening 15-minute window. So you might want to wait for it conservatively to get out of that. First entry you could have taken if you really like the long would be here, one of these two entries. Now, again, you could do the same thing on daily and weekly charts. I use intraday charts because there's so many examples. So this would be the more aggressive entry because you're still inside the opening range. So there's the high and there's the low of the opening 15-minute window. The conservative entry would be to wait for it to be above the opening range, which would have been this candlestick here or this one. One of those two would have been the entry. Now, the obvious dilemma that you have, you say, well, why didn't we get long down here? You absolutely could have. That would have been a little bit more aggressive trade because you were bidding into support. And the reason I say aggressive is if we go back out to the daily charts, you don't have a lot of price history other than the last couple of days to say, okay, I really want to bid as it's going down into support because I have this really obvious, remember we keep going back to obvious, we have this really obvious price action. So no matter what, I'm looking for a spot to get long versus what we're seeing, it's only the last couple of days. So that's why I made the distinction between the conservative entries versus the aggressive ones. So hopefully that gives you an idea of how to work through your trades. And then ultimately, we ended up closing at the high. So if we go back to the daily chart, now what? Right? How do we come into the day and how do you make your own game plans coming into the day? I believe the market's opening higher today. I made that very clear yesterday. We're kind of opening flat today. After this gap, after we failed here, and then now we closed on the highs again, I'm looking for the market to take out the two-day highs. That's my game plan going into today. That's my conviction for today. That's my bias going into today, which is Thursday, April 9th, 2020, just so we're all clear. That's what I expect to happen today based on the last 4 days, based on this breaking down, based on what I see over the last 3 to 4 days and the fact that we got out of this box now to the upside, right? If that happens, I will confidently be looking to buy. If that doesn't happen and we remain inside this two-day consolidation, my conviction level goes from here down to here, and now I have to reevaluate my share size, how many positions, and how long I plan to hold the trades. If we roll over and don't trade through to the upside, let's say jobless claims come out, bad numbers, and the market reacts to the downside, my best case scenario is off the table. Do you guys understand how that's what real trading is? That's what, it's not just chart reading. I want you to be a trader. A chart reader just looks at the price action. A trader builds all of these arguments. They don't just look at the one thing and say, oh my gosh, there's a bull flag, let's buy. That's not the way it works. Not if you want to make money and grow an account blazing fast, right? So that's what I'm looking for today. I am looking for the market to follow through outside of the two-day range, and then if and when that happens, I will start looking for stocks to buy. Now, here's where it gets interesting. Okay, that sounds great. Which stocks do I buy, right? After the market opens, you can do one of two things. You have your list of stocks based on your research coming into the day. And I've gone over these quite a bit. Which stocks were positive yesterday, which stocks were positive from the open, which stocks are well bid on the daily and weekly candlesticks. That's how you come into the day saying, these are the 3 or 4 stocks I want to be a buyer of, or however big your list is. Then you can do the opposite and say, which of these stocks do I want to be short if the market happens to roll over? Now think about this. If the market rolls over, that means we're going back into a 3-day trading range because the last 2 days were basically a trading range, price action almost identical. If we roll over again today, we're back in the middle of that range. So remember what I said a few minutes ago, nothing new. Nothing new lowers your trading expectation for follow through, and then you have to drop down to those micro time frames to try and find an entry. Like I was talking about with a few people yesterday, you'd then be going down to the intraday charts and just using the opening price as your barometer to take those micro trades. And we actually called this out in the Slack group yesterday, and I'm going to actually go down to, I'll show you this in a second. Whether it was the announcement about Bernie Sanders or not, we had 6 candles in a row on the SPY and quite a few other stocks that were well bid, and that's how you hold your trades longer, because it's well bid, no reason to get out of it, well bid, no reason to get out of it, and you follow it all the way up. But here's I'm gonna show that chart really quickly, but then I'm gonna get into the scan of what to do after the market opens, and I really think you're gonna like this. Okay, so the 15-minute chart of the SPY from yesterday, we were looking at this window right here, where we were well bid, because remember, higher highs and higher lows. So well bid, 1, 2, 3, 4, 5, 6. 6 candles in a row that were well bid, higher highs and higher lows. Remember, down here is where we were looking at the first swing low, right? Remember, on the 5-minute chart. Then you go back to the higher time frame to manage the profits. Then we ended up having an inside candle, and we went well offered. So on this inside candle, you could have possibly have started to book your profits, because remember, if you're watching the videos on a regular basis, no matter the time frame, when you start getting up to that 6 or 7 candlestick window, that's generally where price saturates and you start to kind of drift in the other direction. Anyway, I'm going to go back to the daily charts, and I'm going to hit you with something that I really believe will be a revelation for a lot of people. I think it'll be pretty exciting to take a look at. So, most of the filters that I normally look at, and I'm going to zoom up to the top of this chart here. So you can see 205 stocks meet this criteria. Last price is above $20, and I just put that in here for today's illustration. You know that we look at average true range, or I look at average true range above $1.50. That means the low to the high, the average is at least $1.50. So that means opportunity, right? It moves enough on a regular basis to give us action. Volume minimum of 2 million shares. That means that there's regular activity by a lot of people. So again, liquidity and opportunity, right? Then we have percentage change. Percentage change from the open is greater than 2. Change from the previous close and change from the open. So if you notice what I'm looking at here is I'm filtering. First, if we look at percentage change, so let's just say for argument's sake, I filtered by that one, right? And we want the most in this particular case. So this stock, THC, healthcare stock, and this is also a big thing too. You can start to get a feel for which stocks and sectors are strong. Up 30% as a net change, 27% change from the open. So what would that look like on the chart, right? Obviously, a large green candlestick. Isn't that what we want? We want to filter out stocks that meet the minimum criteria for profitability, for volatility, which is average true range, minimum criteria for volume, which means on a regular basis, it's active with a lot of trading, because it's one thing for stock to move $20 in a day, but if it's only got 300,000 shares traded, it's not very liquid and it can be hard to get out of it. I'm sure some of you have experienced that. So just by filtering out on that micro time frame, and I'm going to pull that up again, you could start to find trades intraday. So think about what I just said. If going into today, I'm looking for longs, I'm looking to be a buyer, I'm looking for follow through, then it makes sense that in addition to watching the market, I want to find stocks that meet that same criteria. So again, if we start to filter out all of these stocks, I'll use Square as another example. And again, they're all there. You start to find stocks that had large green bodied candles in this case, because we're looking for a percentage above the open and all of that stuff. So the reason this is exciting is what we just basically did, and I'll pull that up again, is we filtered all of the possible stocks on Wall Street down to only 200. And then you could even filter it down even more, only stocks that meet a certain price range, all of that kind of stuff. Like you might choose stocks that are only between $20 and $30 for argument's sake. You might choose stocks that have maybe a little bit lower average true range. Maybe you don't want to trade stocks that are that volatile. So if we go here and sort average true range by the lower numbers, so these don't really have monster average true range, but they met the criteria, you could still get involved because you could see that across the board in all of those criteria that we're looking for, they were tradable because it met the bullish criteria. So when you start to stack the pieces where you have coming into the day, you built your argument for, like we did, a potential change of trend in the market became a change of trend for those reasons. It broke the trade, it broke the where it broke the trend and then stayed above it. Now we're above it for 3 days. Now we have a 2-day consolidation. Now we're looking for a breakout of that 2-day consolidation, and now we're looking for stocks that meet that Bryant criteria. Do you see how exciting trading can actually be when you understand what you're looking at? And it's not just, I got a feeling I want to be long or short. There's so many great pieces to the puzzle that are simple, easy to use if you take the time to learn them. I know I'm hitting you with a lot of stuff at once, but it's 20 years worth of experience, and this is a serious business endeavor, so it requires a serious solution. So you just can't be one thing and say, I want to get long or I want to sell. There's putting the pieces together. And again, I keep using driving as an example. When you first drove, I know when I first started driving, I was just looking at the end of the hood, like trying to stay in the lane, and that was the only thing you did. Now you drive, you got your arm out the window, the radio's on, you got your arm around your girlfriend or your wife, and you drive 3 miles and you don't even realize you drove 3 miles, and you know, like all the things you did you can't even think about, because you don't need to think about them because they're second nature. That's what I want to impart with you with the market. That's what hopefully my experience, I can give that to you in the market. And again, we're only doing this in a video where there's limited interaction. Imagine being in the market in real time, talking to me all day as it's unfolding, like a lot of people do in our coaching program. There's a next level investment that you would need to decide, do I want to do that? And again, that's up to you. I want to introduce you to the concepts, because I get excited about it, because it's so many years of figuring it out and trying, like, what works, what doesn't work. This works because I am always in the direction of what's happening now. And will I always be right? No, it's not about being right. It's about most likely what's going to happen next, and then absolutely following my rules. So I hope this excites you as much as it excites me, because when you really start to put the pieces together, you start to feel in control. And there is no better feeling in the world than saying, I know exactly what I'm looking at. It's just a question of whether these stocks follow through or not. So I'm going to sign off for today. Remember, be safe, be disciplined, be optimistic about your future, because if you're watching these videos, you have a burning desire to succeed. And I really hope that you leave comments, send me emails, and we can learn to work together and build this community of where we're teaching each other how to stick with our dreams and really move forward. Because look, the market bounces you around, you get knocked around, and you start to doubt yourself. Don't doubt yourself. Use everything as feedback. So I'm going to sign off at Stocks for Breakfast, April 9th, 2020. If you enjoy these videos, absolutely please subscribe. I'd really appreciate it. And have a great 3-day weekend, because the market's closed tomorrow on Friday. Have a great day, everybody.